Good morning, traders. This is Tony D from easyMarkets in the Sydney dealing room. Looks, we've had some pretty interesting news over the weekend. U.S. government has shut down, widely feared on Friday. This has led to some gapping lower in the U.S. dollar, gapping lower in U.S. stocks, but nothing significant just yet. The damage of a U.S. shutdown is done via the length of the shutdown. So most of the times it's over within a week. If it stretches past 1 week, though, you could start to see the market turn into a little bit more of a negative story. The interesting note was that the US dollar was staging a little bit of recovery, though. So the US dollar was trying to put in a low at that 90 level. If that 90 level on the dollar index was to break, could see the market cascade into that next free fall zone. But if the market can somehow hold, if they do get the US shutdown reversed early this week, so today there's another vote coming in the Senate, then you could potentially see the US dollar start to put a little bit of a bottom in. And this makes technical sense in terms of oversold indicators, definitely getting there now. It's 6 weeks on the majors, so 6 weeks for the euro, 6 weeks for the pound, 6 weeks for the Aussie, all one way. Is a fairly long rally mode. It's the last time that happened. Last time there was 7 weeks was 2004. So really, you don't want to bet that the market's going to continue. It's not really the same as roulette. It's not 50-50 every time it keeps going. Especially, this is not stock market. This is currency market. It goes up and down a lot more than stocks. Stocks can go up, for 10, 15, 20 weeks in a row. Whereas currencies, they do have that two-way action that's very more pronounced. And so the euro should be able to, if we get that US shutdown, then it could be a little bit harder for the euro to get past the 123, opening up the 125. Over time, that should happen, but a deeper pullback is definitely potentially on the cards here. Now, why are we a little concerned about the euro? Well, the euro has the ECB meeting coming up on Thursday, and that's where we get the market, which is already front loaded a fair bit of pricing in of the ECB potentially raising its deposit rate in December, starting to get the reaction from the ECB itself. Now, Draghi is notoriously dovish and notoriously likes to control the narrative. So in terms of how he's going to play it, he's most likely going to slow it down. But, I mean, you can't ignore all the good data. So if he's upbeat on the data, then the market may, regardless of his intention, take it as a positive note. So it is going to be interesting to see the price action. But given that the market is so overbought into this event and that the US shutdown may only last a couple of days, it is a dangerous proposition to be long here. There is some positive news, though, on the backdrop that can support it, I suppose, and that is that the German coalition talks are moving forward and getting closer to a resolution. We might see positive news regarding that this week as well. So, perhaps we can get one more leg higher, but just keep in mind that you're not buying low here, and the market does have some risk events coming forward. So the US dollar is potentially going to be in a fight back mode if it can keep on holding this 90 level. That's the main thing we want to be watching today. And the Aussie dollar, battling very similar to the euro, that 80 cents level. Failed to hold it on Friday night, but has popped back above it now that we have the US shutdown in effect. Interesting to see how the market reacts this week. I don't want to be too aggressive up here. Like I said, we haven't had that correction. The US dollar looks like it's stabilizing at that 90 level in the index. So potentially you might get a pullback and then some better levels to enter. That would be ideal. Market's not always friendly, though. You might have that 7th week of US dollar weakness, especially if that US shutdown continues. And perhaps if the euro wants to knock back away, then that'll be the main way that we play the Aussie. Actually, you can't play the Aussie by itself at the moment. You really have to sort of play it by ear with the US dollar weakness or strength. That's the main driver. It is outperforming the Kiwi, though. The Kiwi has had a stellar run, but has slowed down, and the Aussie has really bounced off the 109 levels. Aussie Kiwi has. So in terms of the range trading in this pair, it's continuing to hold. And so 110 is the next big level on this pair. It's forming up an attempt now, so we'll see if we can't get it above that level this week. If we can't, then it looks more range trading is going to continue. But broadly speaking, this has been a very nice trade. Buying underneath 109, selling above 110 has worked out the last few times. Alright, traders, so apart from that, what is on the horizon? We do have dollar yen watches having a bit of a Two-way bet here. What the BOJ is going to do now? The BOJ has its meeting coming up, two-day meeting starting today, ending tomorrow. Now they're likely to come out and say business as usual, that they're not tapering. Try to ease some of the concerns that the lower amount of bonds purchased is a form of tapering, stealth tapering that they've been doing. In that scenario, you may see the yen weaken as well in part of a broader US dollar rebound. But you really have to play it by ear here. You can't just go out and buy because of the potential topping in the euro, potential bottoming in the dollar index. Really going to have to wait for that BOJ announcements. Any sort of rally as well, and the risk reward setting is not that great. And any sort of rally is also got the backdrop that they have been selling into nearly every rally. So it really has to get past this 111.50 for me to think that we're going back towards that 112, 114 support. Resistance levels that we've been so stubbornly stuck in recently. Alright guys, that's a bit of everything here. In terms of trades, the gold trade that we are currently in, we've got time to get out of that because of the uncertainty. Still closed here on the gold market. We'll be looking at getting into potentially some crosses this week to get away from the US dollar action. The main thing that you want to be doing when you're trading is if there's a lot of uncertainty on one pair, rather than trying to trade that, you can look at the relative speeds of the two pairs. So with that ECB and German coalition talks happening in the background, the euro can have a lot of two-way action, but mainly if you're looking to play that the euro's going to underperform the pound, then the euro pound short is the way to play that. Pound's got a lot of support coming from Brexit negotiations, so any sort of pullback in the pound or any sort of pullback in the euro, there's one group's got that commitment to buy on the dip a little bit more aggressively, and that are the pound buyers at the moment. And so the euro pound, while it's very strong in terms of the downtrend, is starting to look very nice. A lot of lower highs here, and we just have to break this support zone to really get the follow-through selling. So looking for that to happen this week, potentially pulling back towards that 85 in the next couple of months as the Brexit negotiations proceed. Alright, if you want to have a deeper chat about some of these trades, come through on the links below. If you're not a member of the dealing room, you can join up and get a deal like myself assigned to you.